Fed, economy grew modestly in late May and June. The U.S. economy picked up modestly in late May and June as the recovering housing market underpinned growth, while the beleaguered manufacturing sector improved somewhat, the Federal Reserve said in a report Wednesday. The Fed's beige book painted a portrait that was generally similar to its previous edition, with activity expanding at a modest pace in most regions. The Minneapolis Bank District recorded a moderate advance, while activity in the Cleveland area was flat. Surprisingly, the summary said that employment continued to grow modestly despite the 287,000 June job gains reported by the Labor Department last week, a strong rebound from weak advances in April and May. And it said consumer spending, which makes up 70% of economic activity, was generally positive but with some signs of softening. Government reports said consumption rose sharply in April and May, so a slowdown in official data for June would raise concerns. Job growth was moderate in the New York region but little changed in Cleveland, and firms hired cautiously in Boston and Atlanta, the account said. Economists say one reason for the spring drop-off in payroll gains is a low, 4.9% unemployment rate that's making it tougher for employers to find workers. The beige book partly supported that view, with businesses in several areas struggling to find skilled employees in information technology, biotechnology, and healthcare. But factory payrolls were largely unchanged or down in several districts, and retail employment was weak relative to other sectors. Brick-and-mortar stores have continued to lose market share to online rivals. Meanwhile, wage pressures remained modest to moderate in most districts, the Fed said, with skilled workers snaring the biggest pay increases. Labor Department data has shown wage growth accelerating modestly, but Fed officials have been anticipating bigger gains in light of the low jobless rate. Housing, meanwhile, continued to do much of the heavy lifting for the economy. Single-family home sales increased moderately despite low inventories that continue to crimp the market, and house prices rose. Another constraint is that Philadelphia, Richmond, St. Louis and San Francisco all cited a lack of available lots for new home construction. Still, home building was mostly positive across the USA. Commercial real estate sales and leasing also was stable or improved in almost all districts, the Fed said. Retail sales were mixed in late May and June after notching strong increases in recent months as consumers benefit from generally solid job growth, low gasoline prices and reduced household debt. This St. Louis, Minneapolis, Kansas City, and San Francisco areas recorded modest to moderate growth, while other regions posted mixed activity or slight declines. Auto sales generally slowed, in line with the June decline in official data reported last week. Tourism grew modestly or moderately across most of the country but was sluggish in New York. Still, the Fed said the outlook for consumer spending was predominantly optimistic across most areas. Manufacturing has been the biggest blemish on the economy for well over a year as weakness overseas and a strong dollar curtailed exports, and low oil prices have dampened investment in the energy sector. The Beige Book described activity as mixed during the 6-week period. There was a pickup in the Boston and Atlanta areas and declines or flat activity in Richmond, Dallas, Cleveland, and San Francisco. The New York, Philadelphia, St. Louis and Kansas City areas bounced back after fall-offs in the previous period. Aircraft and auto production continued to drive growth in several areas, but manufacturers who supply the energy sector in Boston, Chicago, and Minneapolis described business as weak.